It was Monday, July 19, 2010. Malam Sanusi, Lamido Sanusi, the governor of Central Bank of Nigeria, was ushered into the presidential Aso Villa for a landmark audience with President Goodluck Jonathan. At exactly 3:28 p.m., the president signed the Asset Management Corporation of Nigeria (AMCON) bill into law to establish the legal backing for incorporation of the long-awaited and acclaimed banking industry resolution tool and economic stability vehicle. Fast forward to November 2012, when AMCON audited account as at December 2011 was signed off by PricewaterhouseCoopers. The corporation recorded the biggest financial loss in the corporate history of Nigeria of 2.37 trillion as at December 31st, 2011. By the end of 2012, the cumulative losses and shareholders' equity deficit was 3.077 trillion. AMCON has incurred for the people of Nigeria total debt applications in form of short-term bonds of 5.675 trillion and long-term loans of 500 billion. Putting it in context, the cumulative public domestic debt stock as June 2013 was 6.850 trillion. In 2-year period, AMCON total debt portfolio of 6.175 trillion almost equal the total debt stock of the nation of 7.922 trillion as at June 2013. To further illuminate and comprehend the monetary profligacy, total federal government budget appropriation in 2011 was 3.140 trillion with total budget deficit of 1.11 trillion, principally financed by FGN bonds of 852.27 billion. In the same year, Central Bank purchased AMCON bonds and debentures to disburse 4 trillion to the corporation without explicit authority and oversight of the people as represented by the Presidency and National Assembly. AMCON debt proceeds have been largely used to bail out private market commercial banks. 1.845 trillion to purchase 12,500 non-performing loans of banks, principally by bonds, non-performing loans, swap deals. 765.3 billion for acquisition of breach banks from Nigerian Deposit Insurance Corporation, namely Keystone Bank, formerly Bank PHP, Main Street Bank, formerly Africa Bank, Enterprise Bank, formerly Spring Bank, and 1.566 trillion in deposit restoration funding to Oceanic Bank, Intercontinental Bank, Fim Bank, Equatorial Trust Bank, and Union Bank. The 1.566 trillion subsidy sweeteners facilitated the acquisition of Oceanic Bank by EcoBank, Intercontinental Bank by Access Bank, Fin Bank by First City Monument Bank, Equatorial Trust Bank by Sterling Bank, and Union Bank by Union Global Partners Limited, a special purpose private equity vehicle led by Dick Kramer as core investors. The 765.3 billion facilitated the ownership of key banking assets by AMCON, while the 1.845 trillion magically cleans the books of commercial banks to reduce non-performing loans ratio to 5%, as well as gives AMCON ownership of undervalued real estate and industrial assets. According to AMCON, to serve 4.7 trillion of public and interbank deposits in 8 weak banks, its management incurred over 6 trillion of public debt. The only other option, according to AMCON, is liquidation of the banks through the NDIC. The NDIC option, in the aftermath of the Professor Chukwuma Soludo's banking industry, post-consolidation and restructuring of 2005 and 2006 cost the Central Bank of Nigeria total amount of 40.637 billion for undercapitalized banks resolutions in respect of all states Trust Bank, Late Bank, Assurance Bank, Hallmark Bank, Trade Bank, Metropolitan Bank, City Express Bank, and Gov Bank. Some of the undercapitalized banks' assets have been successfully acquired through the purchase and assumption schemes without discernible contagion in the financial market and economic slowdown. The resolution of the 2008 financial markets crisis in the United States through the Troubled Assets Relief Program (TAP) was effected under the Emergency Stabilization Act. The TAP programs was successfully managed by the Treasury Department with rigorous oversight of the Congress. According to reports, $418 billion of public money was disbursed largely to bail out too big to fail financial entities, including AIG, Citigroup, Bank of America, Morgan Stanley, JP Morgan Chase, Wells Fargo, and Goldman Sachs. Total cash receipts on TAP investments as at December 2012 was $405 billion. As at now, the U.S. Treasury Department made money for the U.S. government and people on the TAP bailouts. Unlike TAP, AMCON has scant discernible and sustainable operational generated revenue stream and business model for repayment of its Olympiad public debt. AMCON is looking at voluntary sinking fund contributions from Central Bank of Nigeria and the banking industry not backed by law as principal sources of repayment, privatizing reimbursement and socializing repayments. Since June 2009, when Governor Lamido assumed duty, the Central Bank has been very aggressive and expansive in creating intervention funds and public debt applications with scant oversight on design, appropriateness, and performance, and more importantly, outside the constitutional budgetary appropriation mechanism. Some highlights are as follows: 72.30 billion FGN bonds to bail out consortium of banks for loan granted to transnational corporation, 154.163 billion loans to commercial banks for commercial agricultural credit scheme, 500 billion intervention fund loans, capitalization of assets management corporation, 500 billion debenture loans to Bank of Industry for power, aviation, and loans restructuring, 3.476 trillion short-term bonds for Asset Management Corporation. The CBN and AMCON Acts would not and should not confer absolute monetary power on any one individual, agency, institution, and corporation without efficient checks and robust oversight mechanism. Absolute power leads to abuse, manipulation, and corruption of the system. Absolutely. There is increasingly deep structural economic imbalances manifested in widening income inequalities, growing incidence of poverty, declining access to employment opportunities, and yawning disconnect between money merchants and real sector operators induced by populist exuberance, grandstanding, and hubris. Massive and suffocating economic unfairness and social injustice rule the land while government cheap money sweeps the coffer of the banks. Central Bank of Nigeria must therefore adhere moral and statutory to monetary responsibility and sustainability within the context of Fiscal Responsibility Act and strategic debt management to achieve sustainable economic stability and robust growth. Many thanks for geopolitical crisis in the Middle East. Oil price has averaged $100 per barrel, masking the vulnerability of the economy. Nigeria must take advantage of prevailing oil prices and stable foreign exchange reserves to undertake banking and financial governance reforms that will align monetary expansion with fiscal responsibility to achieve stable and sustainable growth. All that glitters is not gold. I am Ekaite Sanusi.